Hi everybody, this is MBII from MyChartCoach.com, and in this video we're going to take a look at mainly small caps. Okay, so these are all the small caps that made good moves on Friday. Okay, these are stocks that are in play. The markets were crushed on Friday, big down day, and these stocks actually performed well. So these are ones to keep an eye on next week. Some could be starting to top out a little bit and pull back, but they're showing strength during a time that the market is showing weakness. Okay, and so and just keep that in mind. A lot of times these small caps will head higher. There'll be individual stocks running while the large caps are under pressure. And currently NVCN has been the bounce play, up nearly 50% on Friday. As you could see here, it closed above the pink line finally. It finally got above EMA 4. The last time it closed above that level was right here, and it failed to hold that level and pulled back further. You can see all these candles here are below the pink line. It was back here when it was trying to get a uptrend going, was the last time it was above that level, besides this close here and right here. And so the bottom line is, I guess it did close right here as well. The bottom line is EMA 4 has been major resistance, and so is EMA 8. And on Friday it did close below EMA 8 at 0.065. It needs to get back above that level. Now, if it fails to close above that level on Monday, that's going to signal a temporary top. If it does get above that level, then EMA 13 at 0.083 and the bottom of the gap will be on deck. There's a gap between low of day on this candle and high of day on this candle, and so if the share price was able to break through that EMA 13 and bottom of gap resistance, then the top of the gap and the middle Bollinger Band would be on deck. It would test that 10-cent level. Okay, so above 6.5 puts that 8 on deck, break above 8, and it could run to 10 and fill the gap. If it drops below EMA 4 at 0.53 and gets back down into the 5s, below 5, that's going to signal it's no longer in play. This will be a risk to hold if it closes back below EMA 4, so keep that in mind. There was a big volume spike on Friday, and so look at the NVCN 15-minute chart, and this shows the key level to break. It is the 0.062. Notice how it hit the red line and it pulled back. That's the 200 simple moving average. That was, from the bottom here on the 4th, it just grinded its way all the way up to that level, and that's where it's finding resistance now. Similar to over here when it hit the gold line, which is the 100 simple moving average, and it pulled back. So if you're a bull, what you're looking for tomorrow is this move. You're looking for that break above this red line, just like this gold line, and then you want to see the candles right in EMA 4. You want to see a continuation of this pattern. This could be the 1, 2, 3, 4. We'll see what happens. Okay, so this does look like a Elliott wave setup, and it could possibly push up to the next level, which would be the 300 simple moving average. So what you're looking for is a break above, just like this break above here, and then the candles right in EMA 4 up to this 300 simple moving average level, which is lining up with the bottom of the gap. Okay, so it's just below the bottom of the gap. The gap's here, and the bottom of these candles up here. And so so basically you're looking at this 8 level on deck if it can get above 6.2. So keep it on it. Now if it fails to get above that level and it drops below that 5.9 level, that's going to be a red flag if it fails to hold the middle Bollinger Band, and you could see a drop down to 5 to test that 50 simple moving average. Okay, let's take a look at LFIN. This is a chart that I posted a few days ago before it bounced, and so it did close up 47%. It got halted on Friday, and so it was a 12 halt. So basically we'll have to see if whenever they provide the information that the SEC needs, then they will resume trading. There's no telling how long that'll be, and so they did put out statements saying they were cooperating. So we'll just have to see how this plays out. From a technical perspective, you can see it was dropping like a rock. I posted this chart, saying that it was, had filled this gap here, up here, and it was looking like there wasn't a lot of downside support. And so it did come down and it tested the bottom, the top of the second gap. So this gap's filled up here, and there was 2 gaps on the chart. There was the gap here on the bottom, and then the gap up here. here, and it came down and it hit the top of the gap of the first gap from when it first. This is the beginning of trading for the history of this company. This is all this company's ever traded in the history of the of LFIN. And as you can see, it started with the gap, and then it had a big candle, and then another gap. They finally filled that gap, and then they came down and they hit the top of this gap, and it bounced, and so it formed this bullish engulfing pattern, you know, and broke above the EMA 4, the close above. That did signal more upside, and then it did close above EMA 8. This is an amazing bounce for a company that surely looked like a scam when the CEO was interviewed on CNBC. That did not go well for him, and yeah, and then they got shut down and halted after that. And so the bottom line is, when it resumes trading, you know, I mean, is it going to break out higher? Is it going to crash lower? And I mean, logic would think that it's going to open lower. So what level is it going to open at? You know, if they open it down here, you know, so the bottom line is, if it gets back below EMA 4 at 21.73, that's going to signal downside risk and continuation of the downtrend. You know, if they dropped it back down here, you know, down in this 10 or 11 level, or 11 level, you know, that's what some people are saying, it might open at 11, then you would be looking for a potential gap fill to the downside. It all depends on how it works out with their SEC investigation, and so yeah, we'll keep an eye on it to see where it ends up trading when they resume trading on you know, whenever that happens. So yeah. So keep an eye on 21.73. If it's trading below that level, that's going to signal more downside risk. And then what to the downside, I mean, maybe a target, if it starts trading above this level, it might be, you know, shooting for this second gap to fill, which would be a drop down here to you know, I'm not sure the exact level of the top of this gap, but it looks like maybe around $6 or $7, around $6, okay, something like that. Yeah, $6. Okay, so let's look at MBII. This is an amazing run. All right, this is another one of those materials, specialty chemicals sector stocks that's been very hot lately. You can see they took this one and they kept pushing it. Look at this increasing volume pattern. Notice how the volume's been increasing as the share price has been heading higher. You know, that's really bullish, as opposed to, you know, the declining volume pattern as it's heading higher. You know, it keeps making these higher volume highs, and so this could potentially be a climax type spike here on Friday. It is pushing well above that upper Bollinger Band and EMA 4. If the candles do work back into the bands, you want to see EMA 4 hold. You know, you know, it's on this multi-day run here. It's been up for 5 days in a row, and if it you know, closes below EMA 4, that would be a signal that it's cooling down. You could see it drop down to EMA 8 at 253. This is a very strong uptrend. You know, as long as EMA 4 support's holding, the uptrend should continue. You know, it just, when you start pushing well above the upper Bollinger Band like that, many times the candles will work back into the bands, and you can see RSI is at 83, and you have Fasto at 92, and this is prior top level for, you know, you could see here, this is likely where it topped before. See the red candle, and then look at RSI here. That's where the other red candle. So each of these big spikes here were followed by red candles. So more than likely, if that pattern continues, there will be a red candle tomorrow. If you look here on the weekly chart for MBII, you can see here it's on a multi-week run with the big climax spike this week. It needs to stay above that 200-week moving average and turn it into support at 227. As long as EMA 4 just above it, 239 is holding, this uptrend is really strong, and the longer-term swing trade signal is to keep riding. It's just pushing well above that upper Bollinger Band, so you could see that the candles work into the bands, still hold EMA 4, and keep pushing higher. You know, this is a nice multi-week run. It just has that climax spike kind of feel to it. If it fails to break this 2015 resistance level around 350, that's going to signal a temporary top. And then if it does get above that level, keep an eye on 4. 4 is going to be a big, tough level to break. You can see a lot of candles were hitting that resistance level back in 2015 when it bounced and got back up to that level. So expect a lot of resistance at that level. It's currently hitting this big resistance from the October 2015 zone. Now keep an eye on the 15-minute chart. This will break it down and make it a little easier for you. If it gets above 330, then that's a signal, okay, yeah, it's trying to push higher, and then it has to get above 340. If it stalls out at 330 or 340, that'll be a red flag. And then if it drops down below 315, you know, that's going to be a signal, okay, it's cooling down, it's going the wrong way, and then it has to hold 304. Now the risk is, if it gets below that middle Bollinger Band, Band, it drops all the way down to the 50 simple moving average at 281, which that's a pretty healthy drop from the current 325 level. You can see it came down and hit that 50 the last time it got below the middle Bollinger Band. You know, same thing here. You know, that's what happens. And so, yeah, if you don't want to take that ride down, it's good to exit if the chart starts breaking down. Okay, let's look at EYEG. Closed up nearly 21%, you know, over 20% on Friday. You know, but it had that black candle. Okay, and so this is the big red flag. You know, you can see it had the gap up open above that 50-day simple moving average at 63. It ran up to 80, and then it pulled back. And so once it got below that 50-day simple moving average, that was a major red flag. That was a signal, okay, this isn't working out. So was that long upper wick. It has to hold a key level like the 50-day simple moving average once it's above. If it drops below, that's a signal of downside risk and head to the sidelines. And so it ended up forming a big black candle below that, and it closed below the middle Bollinger Band at 48. So that was a really bearish close. The one silver lining is it filled the gap. There was a gap between high of day on Thursday and low of day on Friday. So the gap's filled, so that's good, but it has to get above 48. So going forward on Monday and next week, if it's below 48, that signals downside risk. And if it dropped below 42, that would signal more continuation, strong continuation of the downtrend. Right now, it's still in the bearish downtrending channel. Even though it had this huge run to 80, it got right back into the bearish channel. Stocks that are forming below, or you know, candles forming below this dotted purple line, which is the 20-day simple moving average, between that level and the lower Bollinger Band, which is a solid purple line, signal that the stock's in a downtrend. And so this is failing to break out so far out of that downtrend and get a new uptrend going. It tried to do that back here in March, and it had the same failed attempt. And so once it finally turns that middle Bollinger Band into support, that's when it can start heading higher, and then it would have to get above this 50-day simple moving average. If you look at the EYEG 15-minute chart, you can see the big bull trap, or you know, the big bull trap here. You know, this was the major trap. It opened up here, and then it ran all the way up to here, and then it pulled all the way back. This all happened within the first 15 minutes of the trading day, which was just, you know, if you chased up here and it pulled back, it was just super painful. And then they just stuck it to you by driving it all the way down and instantly, you know, filling the gap. Notice how there was a gap between high of day on Thursday, and then at this point it was low of day on the first candle. And then notice how they came all the way down, and this candle right here, the lower wick, hit that line and filled the gap. And so they immediately pulled it back to fill the gap. So keep that in mind. If it starts, you know, if you get the black candle and then it trades below the black candle, that's a major. The black candle is the major red flag, okay, that head to the sidelines. And if you don't do that and it drops below, that's another red flag. It just keeps on more and more red flags on this chart. It did channel out sideways once it hit that support level. So now you can see the big level to break is 49. Above that 49 level, which was the high close on this channel, that would signal, okay, it wants to push higher. And then if you see it, you know, basically if it doesn't get above 47, that's going to be a red flag. And then you have that 50 simple moving average at 45 lined up with that bottom of that channel, and the high from Thursday drops below those levels, it's going to signal downside risk. Okay, let's look at a couple of the Bitcoin blockchain stocks. We're going to look at SRAX. You know, so they're supposed to be in the blockchain sector. Keep an eye on them. They closed up 9%. You know, it's still light volume, 365,000. You have RSI at 62. Now you have Fasto above 80. Let's see if it can stay above that level. You have plus DI breaking out. You can see how the green line's pushing away. And then notice how the black line, the ADX, is crossing over the red line, minus DI. You know, that's a signal if the black line can cross over that the bulls are heating up. So on Friday, on very light volume, it's hitting this 100-day simple moving average. It actually closed right at that level at 475. So if it can get it, you know, stay above 475 next week, that's going to signal it wants to push higher, and then you could see it run back up into the fives. If 475 turns into resistance, then the candles could work back into the bands, and it needs to hold that 50-day simple moving average at 425. Okay, so it has very light volume. What you want to see is a volume spike and then a push higher through that 475 level. You know, you have the you know, up here in the fives, near 5 to 6 level would be the big level to break from January if it breaks above $5. So keep an eye on SRAX. Here's the 15-minute chart. You can see 485 was that high close on Friday. If it's trading above 485, you have that $5 level on deck, and then you'd want to see that break above 5. If it does drop below that 470 level, that would put the 50 simple moving average at 445 on deck. Okay, so let's look at SSC. Okay, this is another blockchain related stock. It did only close up 5% on Friday, but it was up on a down day. You know, only 749,000, but this is one we've been following. It has RSI at 60. What is that, 65, and so basically it has this uptrend going. You know, we alerted when it closed above that middle Bollinger Band back here on the 22nd of March, and it's held that level, and then it's, you know, it slowly worked its way above that 300, 200, and 50-day simple moving averages, and now the last 4 candles have been working on that gold line, which is that 100-day simple moving average at 308. So keep an eye on it next week. If it's trading above 308, that's going to signal it wants to head higher, and then this 340 is a big level to break. That's from February high close, and if it got above 340, it could really get going and possibly run back up into the 5s. Now, if it struggles with this, you know, this 308 resistance level, you know, if 3 turns in, you know, remains a tough resistance level to turn into support, then you're looking at that EMA4. Keep an eye on 287. Notice how it's been holding the whole time. The candles have been riding higher for the last couple of weeks. A close below that level would be a bearish change in trend. You know, it just signal the chart's cooling down, and you could see it pull back to test this 250 zone where you have all these moving averages converging. Okay, let's look at BWEN. Okay, this was one that started out on Friday with such light volume. I didn't alert it because it was just such low average daily volume. You can see the average daily volume is super low. But it heated up and it broke out. You know, it had closed on Thursday above the 50-day simple moving average, the green line, and that was a bullish close. But it was just such light volume. I mean, we're talking, I mean, I think maybe it was like 50,000 shares or something. It was so light, but it followed through, and then the volume poured in like crazy once it got above the gold line at 245, and they really drove it higher. Okay, I was thinking it was going to stall out here around this 285, this big resistance zone from December and January, but it busted through, and it actually got above that 200-day simple moving average intraday at 304. So going forward next week, it has to go, you know, close above that 200-day simple moving average at 304 and turn it into support. If that level turns into resistance, the downside risk is it pulls back and it tests this 285 level, 85 zone, and if that were to break, the candles could go all the way down here and work back into the bands. The upper Bollinger Band's way down here at 263, and EMA4 is at 255. So the risk is if a 200-day simple moving average fails to turn into support, that, you know, you have a drop all the way back down to 250. So, you know, if it were to fail to get above, you know, hold 3, if it got below 3 and it dropped below 285, that would be your clue that it's breaking down. If it holds 3 and it breaks above, you know, that 200-day simple moving average, you could see, you know, the continuation of that uptrend. Okay, take a look at EBIO. This closed up nearly 8% on Friday. It has a really strong uptrend going as well. It's pushing really hard right now. It closed above the top of this channel. You can see there was an ascending resistance line, and so it busted out through the top of that on Friday after closing for you know, 2 days. So it's 3 days in a row that it's closed above the blue line, which is the 300-day simple moving average at 136. If that level can turn into support, then it could keep pushing higher. This is a really strong move. Right now it has to break 150, and then you have 160 and 170. You know, that's the resistance from back here between September and October. Okay, so that's going to be the big level to break. Now with this pushing above that upper Bollinger Band, if you start to see a red candle form, it has to hold that 300-day simple moving average at 136. If it dropped back below, that would be your signal, okay, it's cooling down and not ready to go. If it holds that level, it has more upside potential. If you look at the weekly chart for EBIO, you can see here it was in this long downtrending channel for multiple years here, and it's trying to reverse that channel this year. It's been turning the middle Bollinger Band into support. It's got a nice uptrend going right now. It did have a bullish close above the 50-week moving average last week, so that was a really bullish close at 120. So you want to see it stay above 120, and then the next big levels to break are the 100-day simple moving average or 100-week simple moving average at 184, and then you're looking at this September high close, okay, from 2017. If it can close above both those levels, that would be super bullish. If it comes up and it hits that zone and fails to break, that could signal a temporary top. You know, just keep an eye on 120. It needs to stay above that level. You know, this is a nice breakout above this descending, you know, this long multi-year downtrend channel. And so downtrending channel, and so it could possibly, if it gets through resistance here through that 100-week moving average, work its way back up to that 200-week moving average at 423, and then, you know, come back up to the prior high close, from back in 2016. Is this the start of working its way back up there? We'll know by whether or not that 100-week moving average holds and the 50-week moving average holds and the 100-week moving average resistance level breaks. Another stock that's a small cap stock here that's on a really strong uptrend is NIHD. It only closed up 6%, but it keeps making the base hits, and the base hits add up. It's like up here right in EMA 4. It broke out above resistance. It had the high close from back here in March, the March high close, and it broke out above that on Thursday, and it followed through on Friday. It's trying to bust through the upper Bollinger Band at 240. Okay, so if it drops below 240, it could work back into the bands. You want to see, once again, that EMA 4 at 226 hold. If those levels fail to hold, the risk is that it drops down to that middle Bollinger Band at 199. As long as this middle Bollinger Band's holding, the uptrend's still intact. Okay, if it were to break below, that would be your bearish change in trend, similar to back here when it dropped below back in January and then had that pullback. And so right now it's trying to push higher. It is on a 3-day run. Okay, so if you look here at the weekly chart, you can see here for the weekly chart, it smooths out the data from that daily chart, and you can see the very strong uptrend. Notice how the candles have been riding this pink line the entire time. As long as EMA 4 at 211 keeps holding and it keeps closing above that level for the week, the longer term swing trade signal is to just keep riding. For your if you're a longer term swing trader and you're not day trading and you're just trying to ride this thing, the signal is to keep riding as long as EMA 4 is holding. On the weekly chart, once it closes below, that's going to be your big signal the chart's cooling down. Right now it's hitting resistance from back here, this whole zone from 2016 and 2017. It has to get through 250, 280, and then you've got this 3 to 320 zone. Okay, this is going to be a big level to break through. It could, it looks like it wants to, try to push up here into that $3 level, and then that's where it could possibly stall out. If you see it failing to get above 250, that would be a signal next week that it's hitting some resistance, and then dropping below that $2.11 EMA 4 level would be a red flag. Here's another one that's breaking out. Okay, this is another, and it's frothy though. It's breaking out with Fasto at 97, RSI hitting 70. It has a hard time staying above this level. But yeah, this is another one that they're really pushing for these small caps, up over 5%. It was on a multi-day run. Look at all the big volume that's pouring in. So it's got this big volume, and they broke it out above high close here from October. And it's above that 350 level. It needs to stay above that level. Okay, so that was a bullish close on Friday. It just needs to stay above 350. If you see it drop below 350 and below EMA 4 at 340, that'll signal consolidation. If it can stay above 350, that's going to signal more upside potential. And if you look at the SENS weekly chart, you can see it just started trading back here in 2016. This is the complete history of the trading of the stock. It came down, it had this nice V-shape bottom, just this huge reversal here, and so now it's working its way back up to these all-time high close levels up here at this $4 resistance zone. So it's right there. It's only 10% away. This thing could come up and make a new all-time high close. The all-time high close is from back here in August of 2016, and so keep an eye on that $4 to $4.10 level. If it comes up and hits that and stalls out, that could signal a temporary top. You can see it consolidated for multiple weeks in this zone, so it could be a tough level to break when tested. It is hitting 380 right now, and this is a big resistance zone. You can see here in 2016 it struggled with this level for a while before it broke down, and then it broke out above. So this 380 to 4 is a huge zone for SENS, so we'll just have to see if it can break out higher. I mean, look at the volume. It had huge, this is the last week was the all-time biggest volume for the history of this stock. I mean, that's pretty crazy considering how volatile the markets were this week. And it held its gains. It closed near high of the week. So this is an extremely bullish weekly chart. Yeah, but it is busting through the upper Bollinger Band, and if the candles do work back into the bands, you want to see this high close hold from October, and that's lining up with the EMA 4 at 329. It needs to stay above those levels to keep the, to confirm that this is a really strong breakout. If it were to drop back in, that would signal more consolidation and back in that previous channel. Okay, let's look at ALQA. Two more to finish with. These have super light volume, but as you can see with BWEN that I mentioned earlier, it had super light volume and then it broke out higher. So keep an eye on ALQA. You know, it needs to have volume come in, only 53,000 shares, but it did close above the 100-day simple moving average on Thursday, and it followed through on Friday with another close above. So if it can stay above that $2 level, that's going to signal more upside potential, and then you're looking at you know, possibly running. You know, there's multiple resistance levels to break, but just a couple of the key ones will be up here. Yeah, this you know, it possibly could make a move back up to this 250, and if it got above 250, then you're looking at that 200-day simple moving average up here at 268 as another big level to break. So yeah, keep an eye on ALQA and notice that it is yeah, it's in that healthcare biotech sector, which you know, the biotechs have been really hot, that healthcare sector. And another sector that's been you know, having lots of extended runs has been the energy sector. And we have SAEX here, similar kind of setup to ALQA as far as like the 50,000 shares and the slightly up, but not as bullish of a chart. You know, ALQA was all the way up there above this. You know, that would put it above the 100-day simple moving average if this was as bullish. It's not. It's very bearish chart. This is a nasty downtrend, but just keep an eye on it. It closed above EMA's 4 and 8. It was the first close above the green line since back here when it was above the middle Bollinger Band on the 12th of March. So this could potentially be a bullish change in trend. We'll see. It needs to have volume come through. If you see volume come in for SAEX this week and it breaks above 135 and then gets above this middle Bollinger Band at 143 or 144, it could possibly heat up. As you could see back here in December, you know, volume came in, it broke above the moving averages, and it had a nice run. So yeah, you never know. Keep an eye on it. We'll see if it can heat up. Okay, thank you very much for viewing this video. If you'd like to learn more about charts and technical analysis, come check out our chat. I'll post the link below the YouTube video. Thank you.